Hey, hi guys. Good evening. Today is another Sunday, another live meeting, another live webinar for the people in my group, Facebook group that are dedicated to help them with not only with the money, the funding from the government, but also with the opportunity of saving in taxes. Okay, so this is a live webinar, and I'm actually running this from my Facebook group. So I'm going to ask to mute all the all of the mic so that whenever you have a question you can ask. Raise your hands, and when I have a question before we move on, you can ask a question. Yeah. So basically, today's meeting or today's webinar, we are going to be talking about another important topic, right? Another important topic, which is what? Okay. So in today's meeting, we're going to be talking about an important topic. The topic is going to be, I think I shared that on all the social media already, is how to cut, okay, let me put it here on the board, how to cut your gross income. How to cut your gross income. Your gross income in half. That's what I said on the post, in half. And possibly save up to 10,000, right? So everybody will be asking himself, hey, how is it possible, right? Yeah, how is it possible? So before I go on all of this, I'm going to learn out what we're going to be doing today. Today I'm going to share about this topic on the beginning of the life, but the second part will be only for the people in the group, because we will have some important information that I have to share with them. So the first part on this live, we are going to be discussing about all of this. Basically, how to have or how to make your income half. It means that if you make $50,000 a year, how to make it only $25,000 a year. We're going to share some type of insight how to make that happen, right? And when it comes to other information, important information, it will be mostly for the people in the group, because those information will be required the recipients of EIDL, DL, and PPP. Remember, so that group was created for that. So I'm sharing this because even though you don't belong to the group, I'm so generous to share with you too, so that you can take advantage of it. Okay? But when it comes to this information, the average person doesn't have to know about it, because you are not a EIDL or PPP recipient. That means, you're not concerned about it. So there's no point for me to share all of that on the live. So what I'm going to say is stop. I'm going to stop the meeting on the live. It will be continuing in our group, because they have the link to continue the meeting and we can actually chat. Okay? So with that said, so how do we make our income below what we actually have on your W2, or what we actually made during the year? How to reduce this? That's the point. The point here of cutting your income, it means cut your income in half. When I say half, it's a disclaimer here. The half, when I say half, is basically to say that we just cut it. Basically cut it. It could be half, it could be even less than half, depending on your level of income, right? Every person is different, right? Because the strategy that you're going to apply, that I'm going to show you here, can make you bring your income and cut 20,000, 30,000, or even $50,000 a year, right? If you apply that, it basically means that you will be above and beyond what I'm saying here, because if you are making 30,000 and then you have a strategy to cut 20,000 out of your income, basically you are left with 10,000 income. This is even less than half of your income, right? It will depend, because you are able to, your situation can allow you to cut $20,000. So I want to make it clear before we continue here. Yes. Okay. What I'm going to say here is that this strategy is actually what many people are able to implement or to apply. It's just that few of us even think about it, even though we are eligible for it. Okay? And what I want to say here is that the only way of doing that, the only way for doing that is to apply one of the many types of this strategy. What is the strategy? The strategy is basically using a tax-free money. That is the strategy right here. So basically, all of what I'm going to be talking about will only to tell you that to do what I'm saying here, you have to use a tax-free money during the year, okay? Or you have to make your money tax-free. So the strategy we are on here, use tax-free money. Tax-free money. In another word, make your income tax-free. This is basically the only way here to cut your income in half, or maybe to the third, or maybe to zero. That means you have zero income. That means it's just like your income was 1,000 a year, even though you make $40,000 a year, right? So how the hell are we going to be able to do this to make this happen? Right? This is the question a lot of people will be asking. So how are we going to make our income becoming tax-free if we don't want to use the income now? Or if you are using our income now, how are we going to use our income and make it tax-free as we are using that income? So that's basically, to me, I don't know everything, but I know what to look for, right? Maybe what I look for, I might find another way, but for now, to me, it's the only way I see that we can make your income being less than you actually see on your W-2. Now, how to do that? There are so many ways, right? I said this, the strategy is to make it, but what you choose, what to use to actually make it happen. There are so many ways to make it happen. There are so many ways to use tax-free money. There are so many ways to make your income tax-free. But we are going to discuss today about only one, okay? We are going to discuss about only one way to make it happen, okay? First of all, what is tax-free money? Because we are talking about tax-free money, So what is a tax-free money? Okay, what is tax-free income? What it is? I'm going to remember, I just told you that it's making your income tax-free. And by the way, what we are explaining here is it not only applies to a normal, business, taxpayer, but it also applies to businesses. The businesses the business owner actually they have even more room for saving. Remember, last year we show you that we're not going to explain it here again. We show you that with somebody, business owner, just putting himself on the payroll, that means paying himself $20 per hour, $20 per hour, we're able to save up to $9,000 in taxes. I explained that last year. That means on top of what you were doing as a business owner, because the group, our group is mostly for business owner. On top of what I showed you guys last year, that means before I showed you that last year, maybe you were doing some type of way to save taxes. On top of what you are saving for taxes. Last year I showed you that you can actually save $9,000 just by putting yourself on the payroll tax, because most of you guys just don't. You just don't put yourself, you also account for your own compensation, right? Or you account for a wrong type of compensation in your taxes. I explained that last week. So this week, on top of this, if you're a business owner, on top of this, you can actually apply this one. Why? Because anytime you have a business, the money will always flow from your business to go to your individual side. That means if you pay yourself as a payroll, the money is actually moving from your business account, let's say, to your personal account. That's your income, that's your taxable income. That income is going to your debit too. Now, even though you have a business, at the end of the business, there's a result, the net income. Whether net income is $10, $20,000, or $50,000, that's another part of your income. It will go to your, it will be part of your gross income, basically. It will be part of your adjusted gross income. They will add it to your income. So if you are a business owner, this applies twice to you, because you can apply this one that I showed last week, then apply this other thing here. Okay? Of course, we're going to the next session. We might also show you how to completely cut your gross sales in half, or create some deduction. So over here, we're talking about the gross income. That means you are just a W2 income. You know, at the end of the year, you have some type of cost somewhere. Maybe let's say you have 50%, $100,000 a year. You have $100,000 a year. Okay, you have $100,000 a year. I was asking, what is the gross? What is tax-free money? What is tax-free income? What is tax-free income? In order to explain what is tax-free income, I'm just going to actually give you an example, and you will understand much better what the tax-free income is. Okay, let's take an example here. Let's say you purchase a car, right? You purchase a $25,000 car. You purchase a $25,000 car, right? And you don't use a tax-free money. What is the real cost of purchasing this car? The real cost, you have $100,000 a year. You purchase $150,000 car. The real cost of purchasing this car, if you are here, let's say your average income, your average tax rate is maybe 32%. Your average tax rate, if your average tax rate is maybe 25%, if your average tax rate is 25%, the average tax rate is what? It's when we get this income, of this level of income, we figure out what is the real tax, and then we divide that by this amount. We found the number right here. So if your average tax rate is 25%, right? You know, you have 10%, 15%, and up to 37% tax rate. But your average tax rate here is 25%. That's being generous, basically. And you purchase a $25,000 car. The real cost of this car is what? It's $25,000 times the real cost is 37. It's 31,000 250. That's the real cost of the car. Minus 25. Why? Because you are paying 6,250. You are paying 6,250 here. This is the taxes. What does that mean? This means that when you spend this money right here, this money is still part of your $100,000. And out of this $100,000, if your tax rate, your average tax rate is $25,000, you also know if you are paying 25% out of this money right here, it means you are also paying 25% out of this $25,000. The 25% of this $25,000 is $6,250. It means you are actually spending, what you are actually paying is $31,000, 250. That is what it means, not using tax-free money to purchase something. Okay, I guess you guys can picture what I'm saying here. So basically, if you have the money, all the money that you're using, when you have $100,000 here, at the end of the year, if you spend $100,000, basically you are actually spending $100,000 plus what is on top of it. Or if you don't want to spend what's on top of it, you will actually spend less than $100,000. That means your real income that you think you have is actually less than that. That you cannot even spend $100,000, even though you make $100,000, because you have to pay taxes on it, right? So yeah, basically, if you're not using tax-free money, it means that out of whatever expense you are making, the tax is always about expenses, right? It's always about expenses. A lot of people doing the tax return, the CPA, that, oh, this is, I spend money on this, I purchased this, I purchased that, I put gas on my car. It's always about, expenses, right? Just that because you make expense, it doesn't always allow you to take deduction or credit for it. If you didn't make that expense, like accordingly, if you didn't even plan how to make that expense, that's basically what it means. Taxes is about planning. Tax saving is about planning how to make expenses. That's the reason why within the company, big corporation, they have a tax department. Why do they have a tax department for? Because every single penny that the company is spending, they have to see the tax incidence of it. Every spending that the company, whether it's to acquire a new company, whether it's to sell, whether it's to purchase new equipment, whether it's to whatever they're doing, they always think about the tax incidence, and that's why they have a tax department. Yes, a big tax department. When they are selling, okay, what is the sales tax? I mean, it's a big thing, right? So it's always most of the time about saving. If I have to pay some type of retirement account, what's the incidence of it on tax wise? So it's about that. So basically, whatever you are making sometimes during the year, don't just go and spend money and spend at the end of the year. Say, oh, I gave this money to the charity organization. Do you even know if the law has changed about the charity organization, the donation that you do or no? No, you don't know, right? You just go and spend the money. Okay, I gave $50,000 to this charity organization. Then you are told, oh no, that company doesn't qualify no more. You always, if you do something that you think that you want to benefit from it at the end of the year, consult with your tax professional. Consult with your accountant if he's also a tax professional. Consult with your CPA. That's the only way you know, because your CPA knows more than you in terms of what is actual, what are the updates in terms of tax saving, in terms of opportunity that you can take by taking this action or another one, right? That's it. I just show you what is tax saving here. In another way, if you have to use a tax-free money, watch this. If you have to use a tax-free money, it means that not only, it means that you don't pay this one because it's tax-free, right? You only spending this one. You're only spending this one, $25,000. Not only is tax-free, that means your real cost is now $25,000. The real cost of the car, that's the first thing. Is the real cost is still $25,000. But over here, your income that will be considered as a real income in your taxes will be $75,000. What does that mean? It means that your tax bill will change, because your tax bill over here on the $100,000 is not going to, it will never be the same tax bill if we consider $75,000. Here, you are only paying $25,000. Now, because it is a tax free, you will only have to be considered as if your income was $75,000, right? And the other thing is what? Is that not only your tax bill is low, but your tax rate is your average taxes will actually reduce. You will find yourself now on maybe 18% average taxes, because chances are that you can move from one tax bracket to another one, from 100 to 75, right? Depending on how much is the reduction. When you move from 100 to 75,000, it's possible that you can move from one tax bracket to another one, right? So basically, this is what the tax-free money is. I'll just show you how to understand. So if you have never used the money that was tax-free money, think about it, okay? Think about it, because you are actually losing every day on tax saving. Now, how to do it? In order to make this happen, you have to plan, because it doesn't happen all of a sudden at the end of the year that you're going to be trying to see how to make $25,000 into $100,000 into $75,000. It doesn't happen. It happens during the year. You have to think about how to make this possible. And I have this example that I'm going to share with you, right? I just explained here what the tax saving is, what the free tax money is, okay? And you can picture in your head what type of plan can we do to make this happen. Last 2018, on 2019, one of my customers, his son graduated from high school. He was going to St. Arnold University. It's in New Jersey. It's a very good school. So he was going to spend $40,000 on the tuition, right? He was going to spend $40,000 for tuition. You know what we were able to make him save? We were able to make him save $12,800. That was just the saving by implementing what strategy, only one strategy that I'm showing you today. He was able to save $12,800. That means this action only, I'm not talking about the other opportunity. This only made him saving. Of course, he was able to save a lot more than this, because there were other ways that he could save money. But this one only, that was the spend, that was the expense. That's the expense that he made, right? That was the expense. For him expensing or spending $400,000, and he had an implementation of a tax strategy, he was able to save $20,000. What does that mean? It means that if he was not able to do this, the real cost of this would have been $52,800. This is what the tuition of his son will have cost him. It will have cost him $52,800. Why? Because he was in the average tax bracket of 32%. On the average tax bracket of 32%, it means that out of this $40,000, your taxes is $12,400, right? If you didn't do that, you will have paid $40,000 and you have also paid $12,000 on top of all your tax bill. That means he will have been spending $52,800. That was for 1 year of his education. That was for 1 year, right? He was a business owner. That means he was making a lot of money, right? But he was able to implement this. He was able to implement this and save. Let me put it clear for you guys. It means that for a $40,000 in spending, he's saving $12,800. That means the total cost was $52,800, right? That's the saving right here. This is saving. In 1 year, this is what he saved, $12,800. Because he was able to make this $40,000 tax-free money. It means it doesn't matter the level of his income that year, he was able to save $40,000. The other one was a nurse. That was in 2018. In 2018, he was planning to go to school to further his education in a master's degree. The tuition was actually $50,000, right? The tuition was $50,000. And it was supposed to be paying 2 years. The first year, it was spending $30,000. The second year, it was spending $20,000. So that is a total of $50,000 right here. The first year, this nurse right here was in the 31% average taxes, right? So basically, what happened is that out of this one, by implementing this strategy, he was able to save what? He was able to save, if we take 30,000 or 31% out of 30,000, it's actually 9,400. So he was saving 9,400 here in 1 year. This is 1 year, on top of any other saving that he was able to make. This is 9,400 here. On the second year, he was still on the 31% tax bracket because most of the time the income doesn't change. When they do the double, they keep doing it. So the income most of the time doesn't change, right? Unless you are sick. Yeah. So the next year, he was spending $20,000. So the 31%, if you want to take the average taxes that he was on, the 21% was around $6,300. So out of this $50,000, this guy was able to save how much? $15,700. So out of the $50,000 here, someone is able to spend $15,700. I'm pretty sure there are so many people here who spend this type of money for their education. Oh, by the way, and sometimes not even for your education, even for your children's education or for your wife's education, right? Because the saving you are making here is a saving for the couple, right? So, yes, I explained everything here. I just explained everything. Okay, so now, since I said everything, what do you have to do to make it happen? How do you call it, right? It's a simple thing that some people even maybe where or you have heard about that in the past, but you really don't know what it is or how it works, right? Yes, it's a simple thing. The tax law, most of the time, is a thing that, or tax strategy, those are stuff that you make. I mean, you faced it, you see it, you just don't know how to go by, how to take advantage of it. That's the problem with the average taxpayer. You don't know how what you are doing in the daily basis can be tax advantages to you. As I will share one type of strategy. If you were listening and you were curious, you have always, guessed what the strategy is. This is to apply the what is called 521 college saving plan. Is to basically use the college saving plan during the year. Okay, I'm sharing it with you. There are so many other ways that some type of expense that you are making every year, most of the time, for the average normal person, expense that you will be making every year. There are so many other ways that you can make those expenses tax free. Tax free means this person here, his income, I'm not going to disclose his income here, whether it was 150 or 120, he was able to cut $50,000 here out of his income just because he has done this. And like I said, there's a double advantage. Since I disclose the name of it, there's a triple advantage. Why? Because this is what it works, right? The college saving plan is a law that was actually adopted permanently into the tax law in 2006. Very few people don't know. Very few people know that it even exists. So in 2006, this was adopted permanently. That means it was not something that you will see if you went. It has never been changed. I mean, they never actually cut the provision away. Sometimes they bring some amendment to it to make it even more, more tax-free for people, but you don't even know, right? Every year, we think about making this law, this provision, more, advantage to people, to business people, but nobody pay attention to it, right? So this law is a way for the government to encourage taxpayer to save money for their education or for their children's education. It used to be for their education only, right? And then it evolved to be for not only for their own education, but even for their wife education. Now, since 2019, so during this 2019, when I was applying last year, 2019, it was not only for college, right? I just show you that over here. This guy, it was in 2019. Over here, she started in 2018. She applied in 2018, this 2019. But in 2019, the law even allowed you, the taxpayer, to apply this even for the children. I mean, for the K-12 children, whatever money you're spending on them, or even you don't even spend money on them, you can actually put money here and put it in that type of saving plan. What does the saving plan mean? The saving plan means what? Okay, I'm going to show you how it works, but there are some limitations that I'm not going to disclose here. I'm going to disclose that limitation in the second part of the group. Or if you are really interested on, to go through that limitation, you can actually contact us. Is that every year the federal government tells you that you can actually put $10,000 aside. Now it depends state-wise. Some states can allow more than that. Most of states allow you 7,000. Allow you to put aside 7,500. It means that if your income is 30,000, 35,000, you are only able to put $10,000 out or make $10,000 tax free if your income is $40,000 a year, right? And you have to spend money for yourself, or you have to spend money for your children. For each person in your family, you can actually put $10,000 tax free. You can actually put it like that. Just say, okay, I'm putting $10,000 aside for my education, for my children's education, for yourself first, and for your children. You have 3 children. That means you can put 30,000. This is $30,000 tax free here. That means your real income will be 10,000, right? Your real income is 10,000. So if you do this one, right? Because you are planning to send your children to school in the next 3 years. The next 3 years, or maybe next year. This year you have 3 children. The next year the cost will be $30,000. You are putting $10,000 for the 3 children, even though only 1 child will be in the college. But you have the possibility to put for each children $10,000. That is $30,000. And next year, when you send him to school, you have to spend $30,000 no matter what, right? You have to spend $30,000 no matter what. Except that when you spend the $30,000, right, you are saving, or even this year, if this year, that's what you didn't even save in the past. Basically, it's meant for you guys to save it to use it in the past, right? If you didn't save, when you are doing this year, even though your child didn't go to school, this year they consider only $10,000 as your taxable income this year. So next year you can do the same thing. Now, if you didn't do it this year, right? What happened? And next year your child is going to school. Your child is going to school. You have to pay or yourself. You have to spend $30,000 for yourself, for your tuition. By the way, it doesn't only concern, doesn't only concern the tuition. It concerns a lot of more stuff, right? It concerns the tuition, the book, computer, everything that is related. Everything that is related to the school, even though your child will be going to the, in campus. That means he has to live in campus, you have to pay for it. It includes this. By the way, the law has evolved, and they even account for student loan. That means if you even spend money for your student loan, it could still be an eligible expense on using this money here. Okay? If you spend money on the student loan, it could still be a saving, a tax saving. That means who is taking a tax saving this year? Everybody in America. I mean, not everybody. It's too much. Most people, right, pay student loan every year, and they will pay student loan for maybe the next 20 years, right? So who is taking advantage of the student loan? I'm not talking about when you get your student loan and Schedule E and stuff. No, out of the money that you have used to pay for the loan, on top of what you normally do, you can actually make it tax free here, right? You can make it tax free. So basically, this is what you can do here. If you have to spend $30,000 a year, but imagine that you have to spend $40,000 and you only have 1 child, but you have to spend $40,000, right? You have 1 child. What you can do, the tax saving you can have is 1,000 plus 1,000. That's you for your child, but you have to spend $40,000. for her tuition, you have to spend, because the child is going to the college, right? You have to spend the $40,000. And you only have you and the child. That means the maximum deduction you can take is those two. So how do you do to be able to claim $40,000, even though it was $50,000 here? Even though it was $50,000, even though it's up to $100,000 that you have to pay, there is a way to make this happen by implementing this strategy. I'm assuming that you have the money, because how are you going to pay for this? I'm saying that you have to pay. Even though you don't have money, you have to borrow money to pay. But as long as you are paying, you can implement this strategy, because you use the income to pay, right? The same year, as long as you are spending this money, you are spending $50,000 a year. If you, as you are watching this video, you spend $50,000 a year, even though you only have one child, and there's limitation here, you have to know that you have lost a lot of money, because there is a way to actually be able to save up to this $50,000 or even up to $100,000, even though you are only allowed to claim $1,000 per person. Okay, let's say you are married. I mean, your spouse is also there. You can also put your spouse there, maybe 10,000, right? That is 30,000. But you have spent $50,000. How are you going to do this? Now, if you don't know how to do this, then you have to consult with your CPA. You know how to make this happen. Now, I'm sure if you don't know how to do this, what you have to do, you have to keep saving every year. That means you will have to put $100,000 here. This is 1 year. I put your wife on it also. Next year, you also, that is year one. Year one, right here. Next year, you do the same thing. Another $100,000 here. Another 10,000. You, the child, and also who, and also your wife. So that's only on year 2 that you will be able to send your child to school if you want to take this advantage, right? But there's a way for you to be able to take this advantage the same year, even up to $150,000. Okay? Yes. I will share the last portion of this in the second part of this with the people in my Facebook group. Okay? But what you have to do is to basically figure out how to make this happen. Okay? How to make this happen? You Google College 529 College Saving Plan. You will see how to make this happen. And then you will see that you can save every year for your children education, basically. But what it will look like, what sometimes you look for it, is that when you search, you are not a technician. You will think that you always have to save money before you can use it. That's what it looks like, right? You will think you have to save money. But you can actually even spend the money. And now, if the year is not over yet, you can now implement the strategy. That means this year, if you have already spent $40,000 or $20,000 or $10,000 in your tuition or your children's tuition or your children's education or on your, let's call it student loan, you still have a possibility of making it tax-free. Tax-free means when we take your income, we cut it before considering the income you made for the year. Okay? So, for this last portion, this the cream on the ice cream right here. Basically, because you will actually know how to do this one. I'm sharing it with you now. By the way, when we have to explain all of this to customer or to client, it will cost $150 per hour to share this with you. And that's what I did. When we file taxes with people, they are lucky enough that we can actually share this with them. When we say they are missing, that means that we give them $150 because in order to spend 1 hour to explain to her what she was losing, yes, that's what we explain. Now, if she goes there and she's not able to actually do it herself and she wants to come back and say, now you charge $150 per hour to actually implement it for them. So now I'm going to, since I spent all of this, right, I just told you that the main point, the 3 main advantages of this strategy is what? Just a recap. Is that the saving for the expense. I'm just going to the summary here. The saving of the expense, right? The money you are spending, because you always have to spend money for something. It could be a good or a service. That's the strategy here, that the spending that you are making is tax-free. The second thing is that by using that, it's actually lower your tax bracket. It lower you to a lower tax bracket. It moves you to a lower tax bracket, because if your taxable income was $100,000, now that taxable income is no longer $100,000. If you have cut $30,000, you are actually made $30,000 tax free. It means now it's only $70,000. It's possible that you move from that one tax bracket to another one, but that's not even all. The other one is that the money that you are putting aside for to save on this strategy is actually growing. It's actually growing. It's basically a type of a bank account, but it's not a common bank account, right? It's just that you're gonna open a bank account. Open a bank account. Go put $10,000 to save, because you're gonna use it next year. You're not taking no tax advantage, right? Go open. People have account. Okay, you know what? In the next 3 years, my children are going to school. I need to open a saving account, so every time I work, I put 50% of my income there. Do you do it because you just think that you have to save, or because you have to take advantage of it? Yes, you are doing it because you have to save money, put money aside, because the next 3 years, 2 of your children will go to college. You don't have money for it, right? You put money in your bank account, but you are not taking no tax advantage of it. Basically, that's what it means. So, and by the way, the saving account that you guys do every day, it just don't grow money, right? The income is what? Sometimes 0.05% a year. This strategy will actually, if you actually put money inside because you actually want to save for your children, it's actually growing inside the account that you put. And when you use it tax-free. A lot of tax-free strategy, when you use them, you pay taxes on it. It means that if I take this one, I say you put 10,000 for 3 people, that's $30,000. 1 year. Next year you use it. Now you want to use 50% of it. Most tax planning strategy that allows you to cut your taxable income, your gross income. When you use them, it's just a tax deferment basically, because when you use them, now you pay tax on it. So over here, when you use it, if you even put it aside before you use it, I told you can actually not even put it for 1 or 2. You can actually take advantage the next year that you spend the money. But let's say you are cautioned that you work every year, you put 20,000 every year, 20,000 every year. When you use it, the 20,000, the 40,000, if it's 2 years, has gone in the account, and you use it tax free, and you have been taking advantages of it. So this is one of the best tax strategy you will implement, whether it's for you, for your children, or even for people that you take care of. That means if your nephew is in your house, she's your dependent, you can take advantage of it. If your children, you are paying for your child, your dependent, college education, student, take advantage of it. So now, how to take it? What does it cost you, right? What does it cost you to do this? Of course, all of these things, you will never do it for free. I'm explaining to you right now, right? Of course, you will not even think about only doing this. This is one thing that we just told you right here. One strategy of making it free. There's a ton of it. In order for you to make it make sense, to make it happen to you, how do you spend? Actually, it's not even spending, right? You are not spending money. You are not spending. How do you invest? How do you invest? Because it's an investment to you. It's not an expense. Whenever you are spending money because you want to get more money, it's not an expense. That's our accounting here. It's an investment. If I'm coming to put $100,000 in your company and you are not giving me nothing, like not giving me no providing service to me, you don't give me food or any type of product or service, and then I just have to wait and see if the company makes money. I have some type of share of the profit of the company. It's an investment, right? You are spending the money to get money, right? It's the same thing here. Whenever you're gonna spend money because you try to figure out how much you can save in taxes, it's not an expense. Unfortunately, a lot of taxpayers and even business owner. Now I'm talking about business owner. A lot of business owners are losing right here. They see it as an expense, right? They see it as an expense. It's not an expense if you have to spend money to see how much you're going to save. Because what you're going to save is what you are making by spending this money. I'm going to tell you right here that in order to spend, to have not only this one, but a global picture of what you can save every year for 1 year, you will have to spend around $1,000. And there are three plans. You have to spend 1,000 or 1,500 or even 2,500. And even plus, if you are a company, it depends on the size of your company, how much expense, what type of expense you have. If you are individual, same thing. There are individual people that are involved in so many type of expense during the year. So this will depend on what type of expense you're making. Over here, this person here, he saved $12,800 on the $4,000. Do you really think he cares about spending $1,000? No, he didn't, because he didn't see this as an expense, right? He doesn't see this as an expense. He sees this as an opportunity, because otherwise he would have spent this $12,000 on his taxes. He would have spent this $12,000 on his taxes. Same thing for this one here. By showing her this one and implementing for her for the 2 years, she saved $15,700. She will have then lost $15,000 a year. So now, this is the last part of this webinar. It's been longer than I anticipated. Over here, what we do to actually help you to do this, and not only this, any other strategy, tax planning, they call it tax planning, because you will never save on taxes. The strategy here is to save on taxes, because taxes is what every company fight to do. They always work on saving taxes. They always work on paying less taxes. By the way, Amazon is the biggest company in the world, right? On 2019, income taxes, you know how much they pay, right? Everybody knows. That's not a secret now. They pay $0 in income tax. I mean, the tax bill at the end of the year, they pay $0 in tax bill. $0 on what? Billion of income, of profit. Out of billion of profit, they pay $0 in taxes. Oh, by the way, that was not all. They have a tax rebate of around 123 million. Like, that means it looks like a refund to them, you know. It looks like a refund to them. Then at the end of the year, they have a 123, it was something around that amount, million tax rebate. It's just like you receive let's say 1,000 tax refund. That's what it means for a company. You will see 1,000 tax refund. A company they will give a tax rebate. That means it's like a tax credit to them. Over here it's become, they assume that your tax credit, your taxable, your income was lower, your taxes was actually lower than you actually paid during the year. So Amazon, out of everything that we're doing, all the income that we're getting, they make trillion of money. So they actually pay $0 in taxes, but they will still get paid. So it's about expenses here, right? If you're thinking about this is one strategy, and there are so many within that strategy. I told you that you may think that you have to spend $50,000 a year, right? You may have to spend, because you have 2 children, you have to spend $50,000 a year, and a lot of people here has to spend money, whether it's for children in the pre-K or the college, or for yourself, or even for some type of apprenticeship. That means when you pay money to get training, stuff like that. All of this counts, right? So very few people even think about it. If I ask you, what did you say? What was the plan? This one only. In the next upcoming section, we will discuss about other tax strategy, right? Out of this one only, how much are you saving? Are you going to school, or did you go to school last year? Did you pay tuition for school? How much did you save? Very few people were able to say, I saved this money. Okay, so I'm done with this portion. So over here, my company, what we do is that we will charge you only $1,000 to actually review all your tax situation, all your income, and all your expenses, to tell you all the tax opportunities available to you. Because the first thing is to know what are the opportunities that you have. Do not go to your CPA and say, this is the tax strategy I want to take. What do you know what? Okay, I give 500 to this charity organization, I have to take it. Are you telling him, or you are asking him if you can take it? Right? And sometimes people are just like people are just sorry because sometimes they are taking the limitation of what they tell. Right? The first thing, if you are thinking you are making $70,000, I always say that if you are making around $70,000 a year, right? You have to consult a tax professional. You have to consult. If you are making around this amount, 60,000, 70,000, you will have to consult. Why? Because the maximum amount you can spend, if I consider that you pay your income, your rent, at $18,000, I say that all the time, $18,000 or $15,000. If you pay your rent at $1,500, that is $18,000. That means the maximum income you have here, the maximum income in terms of rent is $18,000. Out of the $70,000 minus $18,000, you have $52,000. What do you do after the $52,000 to save less taxes? All right? Just asking that they collect more income at work is not a tax strategy. It's just a way to pay your taxes during the year, then paying at the end of the year. Nothing changes. All right? I'm sorry to say that. Sometimes we say that to people to make them feel better, because they are not able to spend money to actually save in taxes. If you're not able to spend money to figure out, this is $52,000, 52, right? If you're making $70,000, you are paying your mortgage or your rent at $1,500. That is $18,000 a year. Now you have $52,000. What did you do out of the $52,000? To save even only $1,000 out of it, what did you do? Saving means what you don't pay. Saving means that what you should have received on top of what you receive. Saving means what you pay less, what you will have paid less. If you saving 1,000, it means if at the end of the year they are telling you that you have to pay 4,000, this is not tax bill. It means out of what they have collected during the year, they also have to pay 4,000 now. If you are implementing a strategy that made you saving 1,000, it means your tax bill will only be 3,000 because you are saving $1,000. On the other way, if you are receiving a refund of 4,000 and that you have lost an opportunity of saving 1,000, it means if you have implemented that strategy, you will have received 5,000 instead of 4,000 because you are saving 1,000. This is what it means. So basically, the first thing is to know what your opportunities are, and everybody has opportunity. We charge you $1,000. The tax planning is the only way you do, only way you can save money in taxes. It's not by calling your friend and say, do you know how you do this? No, because unless your friend is a CPA and he sits with you, he asks about all your situation, all your expenses, and the level of your income. If he doesn't do that, he just tell you this, do that. Now he might save you in one angle, but you might have a lot of more income. Maybe you purchase a car, maybe you purchase a house, maybe you move, maybe you make some type of repair in your house. Some type of repair can give you tax credit. Some type of car can give you credit because of the type of car that you're purchasing. So if you don't see all the picture and somebody tell you, okay, do this, of course, you can implement this one. Right now, I'll just show you here. Go and check, do the research, implement by yourself. You want to save money, right? Of course, within the limitation of this, that one I just told you that within 1 year, there's no way you can save $50,000, but you can do this by yourself. This is one angle. How many angles do you have? You don't even know yourself because you cannot evaluate all your taxes, all your expenses, and figure out what are available for you. We will show you over here. We do the diagnostic on your situation to tell you all the opportunity with all the tax saving you will get right here. Imagine that somebody asks you to see all your income and it tells you every single thing you can do and how much you will save for 12 months or for 25 months. For 12 months, 25 months, he tells you that. How good do you think it will be? Over here, $1,500, we will not only show you how to implement this one. That means we show you all the tax advantages. And now, just like I show you here, you can go and apply, implement it by yourself. I'll just show you what it is. Of course, except that if you have a good banker, wherever it is, that will show you all the advantages of the type of color saving plan that you can take. Yeah, you can tell you, but I just show you here how much it will save you here. So over here, we implement all the strategy for you to be able to actually take advantage of what you have found here on the first plan. So over here, you get that. And people who make money, or people who just feel like they want to save money, go here. But unfortunately, the people who need money the most, they don't come here, right? They don't even go here. If you're making less money, you have to come here because you have to save money. The people making a lot of money, they will spend more and they will pay less taxes. And people will be surprised that how come those people, I have people making $200,000 a year, but they receive the refund. Yes. If you make $200,000 a year, but you have the refund at the end of the year, yes, it's possible. Of course, if Amazon is receiving the refund, what about you? $100,000 is nothing, right? So over here, not only we will do the diagnostic for you, we implement it for you. Every single thing that you have to do, you have to do nothing. You just ask about numbers, social security, all of this number, we implement it for you. You just follow it. Over here, during the year, you have a free consulting for the whole year. Unlimited call, unlimited call. That means there's no limitation on what we can assist you during the year, remember, all of these are based on anticipation, are based on forecasting, right? During the year, you can have a new situation where you are uncertain how to go by. On the 2,500 plan, those are actually paid plan. You can basically over here call to have a consulting to see if your company is actually purchasing a new company, your company is actually selling the company, your company is you are actually merging from a new company, you want to know the implication of it, you are doing this, you are doing that, or you are actually exporting, you are importing goods. You want to know because it's a situation that was not anticipated. Yes, during the year, we can do this for you the whole year, the whole 12 months on this plan. Okay, this is basically what we offer, and sometimes the plan could be even more depending on how big is your company, right? So I don't think I have any more things to say here, except that if you feel like you are comfortable of paying whatever you are paying every month, of course, people actually are always confident until they see what they were losing, right? If you don't see what you're losing, you always feel comfortable. People are comfortable like that until they are actually pushed to do something. If you feel comfortable, that's still fair because everybody has a time. It's always a matter of time, right? Just like this soccer player, when they were thinking about selling them, the coach would be like, "Oh, this soccer player is so good, I'm not selling him." There is no soccer player in the world that we cannot sell or we cannot buy. Just a matter of how much what is your offer. If you come in to buy a new soccer player for your team, the coach says it's not sellable. I cannot sell that guy. It's just because what you are offering is not enough for you, for him to even start bargaining on the deal with you. If you go there, come that amount by 2 or 3 by 10, come back. He will beg you to give the soccer player to you, right? So basically the same thing here. If you are confident of what you are paying, it's good until you will actually see what you have lost. And at that time, you will take action. So with that said, I'm going to stop here on the live video and continue with this portion here for the people in my Facebook group to tell them how you can actually spend more than even up to $50,000 a year, and not only that, take the advantage of it. Okay, and there are more other stuff that I'm going to share with them concerning the PPP, and the EIG, the state of the EIGN. Oh, I forgot. Yeah, at the beginning I was going to announce that this is the end of the month, so I'm done with this. If you were catching the live just to this, I'm done with this. You have to take action. Whether you can do something, if you want to do something, there should be a link somewhere in my Facebook page or my YouTube page to book an appointment with me, or you may have my number to get an appointment to see. Oh, if you don't feel like you have money here, by the way, what we do, we can actually talk to you, right? This is purchasing a plan. I just say that we can actually offer you $150 an hour just to talk to you, to know what you stand. If you have questions that you want answers, we can charge you $150. That's basically 1 hour consulting. That's nothing compared to most CPAs and their own agent when it comes to tax planning. Okay, go to the lawyers. I don't know how much they will charge you, but over here it will be technical. I mean, if you don't have the money, you call $150 per hour. We can start to talk to you about your situation, of course. If after 150 you still have more questions, for people in the group, what we do is mostly is 50 minutes. The first 15 minutes is free. Okay? For people in the group, whenever we talk, it will be 15 minutes free. After 15 minutes, we can start counting how much you'll be charged to actually tell you how much safe. I'm pretty sure, yes, I have done this for free sometime in the group. just without thinking, like you calling someone, his that situation, you look at his schedule, you see, you say, this one you saving, this one you should have done. And then he asks questions, he keep asking. When I say that, they might understand what I'm saying. Most people will spend sometimes 1 hour and 30 minutes explaining because they might go into new question. Oh, what about this? What about this? No, I only do this, and you keep explaining them. Yeah, we have done that for the people in our PPP group because it's based on the tax document, right? That we notice stuff, and we always advise. Whenever we are doing something, we see something, we always advise, even for free, right? But if you are really concerned about this, whether you can call to purchase a plan or call to actually get more question answered, more answer to your question, right? Okay, I think I'm finished with this now. Yes, I'm done with this. And what I was talking about is that the state of the EIDL. The EIDL, before I cut the live to continue on the Facebook group, the EIDL today is the last day of the week, the month, right? Last month we were able to save to help 503 people to get this EIDL run and PPP. The PPP ends already, by the way, a lot of people know, right? Now, the EIDL, this month we were able to help people to save, to get into the process. I'm not saying receiving, because it's a process. Applying is always the first step, because what if you don't apply, you got nothing, because if the money is gone, it's gone. There's no way you can catch up. But if we stop accepting application, then you apply already, so chances are that they will continue processing your application, right? You are able to put people in the system and a lot of people with the money already. 404 people this year only. And I'm so proud of this, even though I was planning to make the same 50,000, the same 500. I'm so proud of this. Why? Because out of this foreign, we were actually working on another pan, another area of our strategy in terms of EIDL and PPP, right? We're talking now EIDL and PPP right here. EIDL. Why are we still talking about PPP? We're talking about PPP here. Why? So let me put here PPP, EIDL. Why are we still talking about these two people? This PPP, they stopped the program already, as many of us may know. They stopped the program, it's still not end already. We are working on EIDL. So this year, this month, I was only working on the EIDL side, right? But I only was able to work with help 404 people to get in the system. A lot of them receive the money already. A lot of other people are still waiting. Some people receiving email and have to do some type of stuff before moving in the process. And why I'm proud of, because I was already able to get around 120 people to get the PPP. The PPP money be able to be forgivable. So we have forgiveness. So I have 120. That means if I have to add 400 to 120, that means that is actually like 524, right? Success story, let's put it like that. Because to me, it's a success story. If I'm able to put somebody in the system, if I'm able to actually guide him to be in the way that he's going to receive money for his business, right? This is a success for me. If I'm able to have somebody, you receive $10,000 as a PPP. Remember, we said the PPP was a loan, right? The PPP was a loan. What does that mean? It was a loan. It means that you have to pay the money back when you see the PPP, I guess they are watching me here. All the people are helping to receive PPP. Most of them are in the group, our Facebook group. Even though you're not in the Facebook group, and then you receive a PPT from anyone, any other, by yourself, by any means, you have received a loan of $10,000. Until you know how much of this amount will be forgivable, then you still owe $10,000, right? Until you know, and how do you know? We have a meeting. We have last week or the week before last week. We have actually a case study when we explain how to figure out your money, right? How to figure out how much will be forgivable. I'm not going to go into detail here because I don't want this to be very, very long. There's no way you will know how much you will get as a forgiveness of this amount until you know that. And how do you know that? We have developed this, a PPP expense tracker. PPP expense tracker, which is actually it's like an application or a smart spreadsheet, let's call it like that, that you will use by plugging without thinking any expense that you made during the year or out of the money you receive. When you plug all the money in there, the system will actually tell you how much will be forgivable. How good is that? Because you don't want to be surprised to just go and tell the bank, because you have to go to the process of forgiveness with the bank. The bank will not tell you to figure out how much is forgivable for you, or if the bank has to do that, the bank will never go into your head to analyze what you have spent, what was forgivable, what was not. The bank, if you have nothing that shows with all the dates, like the detail that, okay, because it's called supporting document, right? The supporting document is basically when you have something that ensures the person when you spend, just like I told you on one of the webinar here, that when you track your expense during an audit, you are very good, because if you can show your audit all the reports, monthly reports of your spending and your income, they are less likely to keep thinking that you did something wrong. Like they might just want to see a few supporting documents. They might pick one or two or three to try to see if you have supporting document about them. So this is a supporting document. If you go into to a bank, you say, oh, okay, you gave me $10,000 or you gave me $5,000. I spent all the money. Let's cancel it off. Let's cancel it out. No, nothing. You may even end owing the same $5,000. Yes, you have to mute yourself. Please, can you mute yourself? Let me mute. When I finish this part, you can talk, so that if you have a question, yeah, I'll be too long. So over here, I create this one. I create this expense tracker here to help you to actually do it. Or you have another choice. You can actually consult with your tax professional. Of course, we are actually charging a lot of money to make this money forgivable. If you have 10,000, how much are you able to spend? Let's say simple calculation. You have $10,000. How much are you able to spend to keep the $10,000? If I have $10,000, even though I have to spend $2,000 to keep the $10,000, I will do it. To be honest with you, I will do it, because if I don't, I will have to pay the whole $10,000 back to the government, to the person who gave the money to me, right? This expense tracker, we developed that because we will not be able, we are not able. When I say I've done this one, that is a team. I just cannot. And we have so many people that we were supposed to help, but we just could not do it, because there's a capacity that you cannot go beyond, right? So we and those people that we help, of course, those people didn't use this tracker That means they want us to go through step by step, analyze any expense for them. You tell me the expense, you tell me how much you spend, I have to do it for you. We charge them a lot. I just told you that we charge in general 150 per hour. If you have to perform some type of consulting for you. But since we know that we still have a lot of people out there who receive the PPP money, it's already even overdue. The PPP was supposed to be for 8 weeks. Even though they have extended it for 24 weeks, a lot of people have the money that are always past due. We have created this for you guys to be able to use it. We only charge here $50 to get the application, and you can find it in my Facebook page or on the description of this video. You will find a link to get the copy of this application. To figure out, once you figure out it's over, you just have to consult your tax return, because or me or whatever it is, because you know that it will be forgivable. You know how much it will be forgivable. A lot of expense that you have made, I'm talking about experience. A lot of people came to me over here. Oh, I spent this on that. I spent this, I purchased this. I don't even have no money. I'm like, no, sorry, man. All of those who are saying are not even eligible, are not accept eligible expense. You have to create some type of new expense that are going to account for the money that you say you spend. Otherwise, you're going to pay the money back. So that is actually what it's about, right? So this one will not talk to you. As soon as you put something there, it will analyze and tell you if it's forgivable or no. Or if a portion of it is forgivable, yes, it will actually tell you if a portion of it is getting forgivable. If you have a question, within your application, there's a link to book an appointment with us to explain to you if you have a question here. So you will leave a link inside. So yes, we have done over here, and this portion was normally supposed to be in the group only. So I'm going to stop the live here, and I hope you guys can actually enjoy what you have been enjoying here. I will share the last piece of the content only with the group. So guys, it was a pleasure with you. It was a pleasure to share this information with you, and I hope to see you. Before that, is there any question that you have notes that I have to address before I stop the live? Adeline, did you see any question from people? Did somebody ask question that we have to address? Adeline.
No question, please.
Okay, no question. Okay, yes. So basically, okay, no question. That's good. So I'm going to stop the live, and I will continue on the group, because there's something that was demanded to me yesterday that I have to go into. Brice Nietzsche, I hope you can pronounce what you asked me. So I'm going to explain that in the Facebook group right now. So it was a pleasure for you guys, and I hope to see you next week for hopefully a new section of tax strategy and how to save money for the end of the year. Ciao.